Hello, everyone, and thank you for joining us. Um, 15 years ago, when banks dismissed cryptocurrency as nothing but more than a cyberpunk pipe dream, fast forward to today, and many of those same institutions are not only involved in cryptocurrency, but are also embracing the technology. Major players like JP Morgan and Goldman Sachs are also experimenting with it and are already offering private blockchain services. Now, despite the controversy swirling around the growing marketplace for digital tokens, I want to begin the conversation with a question that is, what initial needs and opportunities sparked the rise of tokenization, and how has it gained momentum in transforming the asset management sector?
Again, as I was discussing before the panel, tokenization is two different types. There's security tokens and utility tokens, and probably the panel today is more about security tokens. People raise money through tokens in the crypto space just because it's easier. You can get access to more retail capital. Now, what opportunity does it get for investors as such is? See, there are a lot of things which a retail investor might not have access to. Can he buy a hotel property in Dubai? No. What happens is it's easier to fractionalize that property up and get access to that. Sports has a lot of fractionalization that is coming. So I think the opportunity here is to get access to assets which are high yield bearing assets. Probably in India, the best interest rate you can get is 8%. How do you get more than that? In Dubai, real estate gives you anywhere from 5 to 8%. If you have a great real estate fund manager who tokenizes real estate, again, who tokenizes real estate is in the future, because at the moment there are no clear regulations on it. I think the only way people do it is there's a smart crowd company which does it in Dubai. They don't tokenize it up. They set up a company with multiple investors who fractionalize it up. So I think the biggest opportunity is access to a lot of assets that give high yield as well as have high capital gain perspective per se. And that's how I look at it from not the utility token, from the security token perspective.
Acha, thank you for joining us. We were just talking about what kind of opportunities we can get when we talk about digital tokens, and how has it gained momentum in transforming the asset management sector, if you would like to add up.
We were just talking about it in a closed-door panel discussion with Surajit. He can throw some light on it. The issue is that Bitcoin took a long time to get accepted as a cryptocurrency. Blockchain technology took a long time. Now everybody's adopting it. I think what's going to happen is the issue is liquidity. You can tokenize any asset. How do you determine the value? You talk about an underlying real estate asset or underlying value in artwork or any other asset which you can say, I'm going to tokenize. Issue is, once you tokenize it, where's the liquidity? Where's the marketplace? Where's the fair market value? How do you determine? So if you're stuck in a token, we've been investing in crowdfunding for a long time. So I was telling Surajit before that it's like crowdfunding, it's digitizing crowdfunding. But crowdfunding has a definite payout. So in 5 years, I know I've invested in this particular project, we're going to get paid out. Whether we make money along the way, you can make dividends, you can have returns, like in a REIT, for example. But what happens in a tokenization situation is you have to build a huge community first, or you create the marketplace first. So you go to stock market, it's regulated by SEBI. You're investing in a particular stock, it'll trade at 20 times forward P or 15 times forward P. How do you determine the value of a token? So I think more than me, Suraj was talking about creating a community which will then become the base of a marketplace.
Yes. So in terms of the need for tokenization, I think the question was that fundamentally, I will touch upon the real world asset classes only. And there are asset classes which have traditionally been illiquid. Those are be it traditional, be it alternative asset classes. If we look at today projects happening around the world, there is spaces like music, movies, art, even real estate. Real estate is traditional, but there are challenges associated, and so on and so forth. So the primary benefit, or rather advantage, of tokenization is to bring in liquidity, but with a caveat that obviously there are challenges ahead which need to be mitigated.
So replacing a century-old system of recording asset ownership with blockchain-based digital record presents significant risks. And some regulators are yet to approve those kind of innovations, including places like Singapore as well. So what kind of, emerging challenges do you foresee with tokenization, and how do you plan to manage them?
So the one that we are also facing today, primary is jurisdiction across different geographies. Certain geographies, certain countries are ahead in that space. If you look at the matured ones are like Singapore, UAE has come up with regulation, Switzerland. And then there are others who are really catch up. So jurisdictional regulatory issues seem to be one of the most challenging aspect of there. Second, of course, then comes with multiple factors like security, anti-money laundering act. There are evolving issues related to money laundering. All these issues. So these are so we'll have to tackle it geography by geography. So if you want to get into a market, say you want to offer services in UAE, then obviously you have to decide whether ADGM or VARA. I'm talking specifically the security token aspect that you was mentioned about, and then sort of roll out. So the biggest challenge today, according to me, is the regulatory aspect part of it, managing that different regulation across different geographies.
Vineet, if you'd like to add.
Again, I think the biggest challenge is the education part. 4 years back, the US councils came and met me when Iran had shifted its balance of payments to Bitcoin, and they wanted to understand what Bitcoin is. And they actually mentioned a statement that he did. He said, it leads to money laundering and drug trade. Point is, US dollar is the biggest way how you can money launder and trade. So it's not true. See, you have to look at it from a global perspective. What value does Bitcoin get, or what value does cryptocurrency get? In Latin America, people in Argentina have seen a 95% depreciation of their currency in the last 10 years. You have seen what happened in Lebanon, you have seen what has happened in Turkey. In these places, things like Bitcoin are becoming a store of value. I'm not talking about Ethereum and everything. Those are use case utility products. I'm talking about Bitcoin per se. So the point is about educating people about this. And when I talk in India about crypto per se, everyone's like, isn't it illegal? And I have to explain to them that it's not illegal because there's a 40% taxation on it. And I name a few things which are illegal. I don't want to mention that. So the point is, it's about educating those people up. In Dubai and UAE, the biggest advantage is that they're very forward thinking. When it comes to VARA, when it comes to ADGM, they think in advance. Today they have the licenses for prop trading as well as company formation. ADGM has certain licenses. They're getting things on. They were thinking about NFTs as such. But in other geographies, it's still, people think that this will be a way to launder money. This will be a way to cross-border transfer. And how do we control and regulate this? Again, for me, as a true crypto believer, I don't think this should be regulated. Because when they say that ETFs have come and now it's a more regulated environment, Bitcoin is not meant to be owned by someone else for you. It's not a stock. It's not something that the third party needs. You have to control it. So limited regulation, not full regulation as such.
Achal, if you'd like to add up.
I think, Vineet, the only issue is that when you mention ETFs, I personally feel there'll be ETFs which will actually invest, or it'll become an ETF which will mirror a token, a group of tokenized assets, I mean. So, for example, when I wanted to invest in Bitcoin or crypto a few years back, it was a very complicated way to go and register yourself through these platforms. Moment BlackRock and others came with ETFs, we transferred everything into that. Because then it's like a stock, which reflects a crypto asset. So how is it different in the future? If you can, I was giving an example. There was a Korean company which came 4 months ago in a Shark Tank event where I was a jury. They said, we want to tokenize Burj Khalifa. And they went and approached the government. I have no idea what happened. And they were guaranteeing and willing to underwrite $1 billion worth of tokens. Now, if they ever manage to do such a thing, then what's wrong with somebody issuing ETF backing it? So I'm trying to understand, maybe you guys are more knowledgeable, that an ETF would create a proper liquidity, proper valuation methodology, proper regulation behind it, a proper institutional backing, which is missing in the tokenization world right now.
So, I was at the World Economic Forum and the head of regulator for El Salvador was there, and ETF had just got launched then. And he was very happy that ETFs have come, liquidity will come. But I asked him a simple question. I said, you've been a believer of Bitcoin. You understand the core principle of Bitcoin. It is your money, your control. Why was Bitcoin created in 2008? Because the banks killed everyone. Your money was owned by the banks. The banks decided whether they can give you loan. They decided everything. Now in ETFs, you are saying the same thing. Your Bitcoin owned by someone else. Now, but he said, no, this is regulated. I said, do you know that FTX was also regulated in the Bahamas? So basically, you are giving control to someone else, and if he tomorrow goes off, going off can be through multiple channels. They can become bankrupt, they can become something. So you don't own that. Why can't I get access to my FTX Bitcoins? Because it's owned by FTX. You saw what happened in India. There was a regulated exchange in India, VCCircle. Wasn't it regulated? So point is, Bitcoin was never meant to be owned by someone else for you. It was supposed to be yours. So that's where regulation, regulation is needed. Stable coins regulation is needed because everybody can go and print a new stable coin. So there are certain regulations needed, but it cannot be overall regulatory thing. It's like the Indian stock markets of 1980s. People used to buy on rumors. You had the Harshad Mehta scam, you had the Ketan Parekh scam. But come 20 years down, yes, it is regulated, SEBI regulates it. Similarly, crypto is that 30 years back of Indian stock market. Scams will happen, pump and dumps will happen, and suddenly when mass market comes in 2030, stronger regulation will come, and that's when the market is supposed to be there.
Speaking about regulations, how are the regulators in UAE viewing tokenization as a process, and when can we get some, centralized rules about it?
So again, there has been a lot of talk that tokenization is getting ready in Dubai. So it's been getting ready for the last 1.5 years. You still cannot regulate. Like you gave me an example. I asked you that, have you seen any article where it clearly says that it's... Mantra DAO is trying to do a tokenization of real estate. Ondo Finance is doing. But in Dubai, regulations still are supposed to come. 3 months back, they were getting the licenses. So they're looking at it positively because they see value in it. But it takes time, and I'm pretty sure it will come faster than anywhere else in the world.
Surajit, what do you think?
Yeah, I agree with him. It's still evolving. It's coming up. We are exploring licenses across different jurisdictions. Our product is ready. Before we go live, we want to make sure that we tick all the boxes before bringing our product. So, like I said, UAE is still ahead of the curve. Certain jurisdictions are also there. Interesting development happening in the gift city in India. So yeah, but it's like I said, it's going to be work in progress for many more years before we can see a much more standardized, globally accepted kind of regulation, which is yet to be there.
Achal, if you'd like to add up.
The IFC introduced regulation in March this year. DMCC created a crypto center 2 years ago. And a lot of companies are operating there now. And as both Vineet and Sarojit said, it's going to take time. But particularly tokenization will take time. As we said, blockchain is already accepted by everywhere in the world. 5 years ago, if you had made a statement that blockchain is the technology which will stay, nobody believed you. So it takes time. The problem in tokenization is to build a large community of users and create a liquidity through a platform. There are multiple platforms, but there's no liquidity. There's no guarantee that I today invest $1,000 and I can tomorrow go and sell it. So I can be stuck for the next 5 to 10 years. That's where the issue is.
So one of the critical things that I'm at, when you look at the numbers, there are 500 million wallets in the world. This is 5% of the world's population. It's nothing. And again, out of this 5%, 95% are speculators. They wake up in the morning to see Bitcoin price. They don't understand what Bitcoin stands for. They don't understand what a smart contract platform is, what Ethereum or Solana is. They're all speculating. So the point is, until this 1%, under 1%, doesn't end up being 10, 15%, it won't happen. When we talk about communities, there was this great movie, Dumb Money, which was on, it was released 3 months back, and community was being talked about. It was about the GameStop debacle that happened. So communities are critical, and that is what runs crypto. But paying customers in the end will make sustainable companies. Otherwise, we'll have the dot-com crash of crypto probably in 2026.
When you speak about, that there is not enough awareness surrounding tokenization, with not enough awareness also comes a lot of myths that needs to be debunked. What are some of the ongoing myths about tokenization as a process and that requires to be debunked if someone is enthusiastic about investing in it?
I think the biggest myth that people have to understand is that this is not magic money. There is some underlying value to it. It's just like a startup investing. In a startup, you invest in equity. In crypto, you invest in a utility of that company. So when I invest in a Binance token, I'm investing in the platform that will become Binance. People think that they invest in anything and it will magically go up. No, that's not how it happens. Please understand that Sui blockchain, I'm an investor to Sui. I've done 400 plus investments in the crypto space. Sui blockchain was Sui and Aptos. Both of them were built by four people who came out of finance, came out of Facebook, and they were building the Facebook blockchain. Now, when you invest in a person like this, you are sure that he'll take it somewhere. It's a better smart contract platform. They raised $300 million. Today, they are valued at some $18 billion. Yeah, when you talk about WorldCoin, Sam Altman is building something. So people say, what does WorldCoin do? It's the Aadhaar card of the world. If it gets global adoption, and if the transaction has of an identity becomes widespread, he's valued at $40 billion right now, started the fundraiser at $3 billion. So thing is, founder has to be important, use case has to be there, adoption has to be there.
Correct. Surajit, you were saying?
Well, the way we look at it, there are two types of use cases of the blockchain technology. One side is that which is on the decentralized side, which is talking about crypto. Bitcoin is an example, which is store of value. Then there are utility tokens. In fact, we unveiled the white paper of our utility token today, right? But on the tokenization side of it, the real asset bringing on chain, the adoption and so education is something we believe that that's where sort of things have to be made much simpler. So what we are trying to do at Toyow is we are not telling people anything about the technology. We are just saying that come and invest in a music, come and invest in a movie and get returns associated with the returns of that. So like 1%, the crypto population, crypto native probably could be 1% of the population. Out of that, even like he rightly said, there are very few who would be actually knowing how to use a wallet, private wallet, moving asset from one wallet to the other. Rest of the people do not know. And I think what we are trying to do is that we'll have to build products for them to be able to participate in that very easily. And that's where for as far as we are concerned, that's our focus.
Achal, if you'd like to butt in.
I think I have nothing much to add. I think we've already covered that, and Vineet is talking about the right thing, that less than 1% people, and I'm talking of people who invest, not the world's population, are actually aware of what blockchain is actually, what is it about, technology-wise, and they're not aware. They just want to invest in crypto or in Bitcoin or Ethereum because everybody else made money. They don't understand the basic concept. And I think when he talked about it being a replacement of the dollar in terms of my money, my platform, that concept is not understood by even 0.01% of the world's population or 0.001%. So I think the regulators are going to step in. The same institutions which govern the stock market are going to step in. The same ETFs are going to be made once it becomes widespread, which I think is 5 to 10 years away.
Taking a point from you, Surajit, you spoke about the Gift City in India now announcing plans for a regulated platform to tokenize real-world assets. How do you think it is, it is going to help India establish a marketplace for tokenization, especially considering that it has been lagging behind from their significant peers?
Yes, in terms of adoption, Gift City has actually started few sandboxes, and they have in fact tokenized a piece of real estate there, and it's available for investment. So they are trying to build that ecosystem there, allowing people to come there, both from an FDI inflow point of view or rather taking the Indian companies global. But that's happening at a very small scale. It's yet to go there so I think in terms of the regulatory curve and the timeline point of view, I think we are a little behind, but probably will catch up quite quickly.
Coming to the last question, if you all have to add up a few lines about what could potentially be the future of tokenization, I would like to conclude with that. Achal, we'll
Let me start. My only biggest issue is there is no platform today There's no large community platform where I can go and trade any kind of token. It's a hit and miss situation today. So the maturity in the market or the depth of the market in terms of liquidity, in terms of number of users, it's in a very, very nascent stage. So as an investor, I'm talking. I'm a little skeptical. I love the concept, and it brings liquidity. It can potentially bring liquidity to a lot of illiquid assets. But we are a little many years away. And as Vineet mentioned one thing, I'm waiting for 26, 27. If there is a bubble, if the bubble has to burst, it'll burst in the next 2 to 3 years.
Correct. Vineet, from you, for the concluding answers, I would actually ask one additional question, that what new opportunities does tokenization offer to venture capital firms as well?
I think it gives us access to new companies. It's not about buying the asset on the tokenized platform. Like, I don't want to buy a real estate which is fractionalized and get 5% yield. First of all, 5% yield in crypto is boring. So someone was selling me a house. So I bought the first Bitcoin house in Dubai. It's on the Times in London. So when someone was selling it, he said, you can make 5%. I said, wo to main din mein banata hu. So what I'm trying to explain over here, for us, it's not interesting to buy the asset. For retail, it is. Because, retail does not get access to these deals. Can retail get a property in Dubai to buy? No. So they go to a platform, say Ondo or something. In fact, there was this startup which was doing tokenization of US treasuries. So suppose this startup raised $10 million in Dubai and wants to not do anything risky with it. So he would go to this place, take the treasuries and earn 8% yield from it. So, access to such people. For us as venture, it's more on the platform side. If Ondo gets used multiple times, it's already a $3 billion company, then I become the big guy there. There was a company, I'm forgetting the name, I have done 2-3 investments. Like Om, it used to be something else. Mantra DAO used to be something else 5 years back. And because there's this RWA wave, everyone's coming on and saying, I am an RWA player. So for us, it's on the investment part, just like a venture capital, not buying the asset, but building the platform. And I think future is bright. Next 1 year is the crypto bull run. Enjoy it, 2 days from today. And then we have the .com crash of crypto in 2026.
Surajit, what would be your concluding thoughts on this?
We see huge opportunity in tokenizing real-world assets and bringing them accessible to a broader community of people who otherwise didn't have access to them, thus bringing in liquidity in those asset classes. And I think over the next, once the regulatory issues across different geographies get clearer and clearer, we will see broader adoption in this sector.
Well, with that, we conclude our panel. Thank you, gentlemen, for your valuable insights.
Thank you.